Good morning, everyone. This is Rob McDougall with Zhang Financial here with your weekly economic update. Today is Monday, January 27th, 2025. So in terms of economic activity last week, that was reported very scant as we previewed, and it was mixed, the three data points that we had. We had initial jobless claims that were expected to come in at 220,000, came in a little higher, 223. Hardly worth mentioning. Then existing home sales came in actually stronger than expected. That was a slight beat, about 50,000, so kind of noteworthy. Thirdly, the Michigan Consumer Sentiment Index came in. The consensus was 73.2, and it did disappoint. It came in at 71.1. So with all of that combined, the expectations for fourth quarter GDP, which finished in December, per the Atlanta Federal Reserve, they actually took their estimate up for the fourth quarter. It had been 2.7%. It came in at 3.0. So we're going to have a read on GDP growth coming up. I think it's this week. We'll see in just a moment. But the fourth quarter, the Atlanta Federal Reserve thinks was a very strong, positive 3.0 GDP growth. In terms of inflation expectations last week, hardly any movement, slight uptick, had been 2.41% expected. Average over the next 10 years moved up 2 basis points to 2.43%. One of the big events this week, the Fed meeting, which starts tomorrow. They'll announce a rate decision on Wednesday. Expectation is 97% plus that there will be no change, but it doesn't mean it won't be impactful. The meeting could be. Investors are looking to see what the Federal Reserve has to say about the economy, inflation expectations, future growth, and most importantly, the direction of and magnitude and timing of any future rate cuts. So investors, prior to the meeting at the end of last week, the expectation by investors of at least 2 rate cuts between now and the end of the year actually increased last week from 49%. The end of the day on Friday was up to 65% probability. Last week we had a number of S&P 500 companies that reported earnings. So far we have 16% of the S&P 500 that have reported earnings, and earnings so far very strong. Please do report this, and this is very necessary for the equity market to continue the upward trend it's been on. So far, out of those 16% of the names that have reported, 80% have beat earnings. That's above the 5 and the 10-year average. And the magnitude, they've beaten by an average of 7.3%. That is above the 10-year average of 6.7%. So the positive earnings per share surprises that we've seen so far, it's mostly financial sector, definitely driving the earnings growth year over year. On the other end of the spectrum, energy companies have been reporting negative earnings. So far during this earnings cycle, again, the 16% that have reported, the expectation has risen now for the full quarter, fourth quarter. S&P earnings now are expected in total to rise 12.7%. Coming into the quarter, the expectation was 11.8%. So if we do end up with that 12.7% earnings growth, that will be the best earnings growth rate year over year we've seen since the fourth quarter of 2021. Now, last week, as I mentioned, heavy earnings calendar. This week even more so, but the focus this week most definitely will be on tech names. I'll just rattle off a number of the larger ones that are reporting this week. We have IBM, Lam Research, Meta Platforms, Microsoft, Tesla, Apple, Intel, KLA-Tencor, and on the non-tech side, but very important to our client base, Stryker will be reporting tomorrow, which is Tuesday. So take a look at the results from the indexes last week, the returns. Very strong week for the S&P 500, up about 1.8%. Within that, U.S. growth and large cap did outperform, growth up 2.4%, value a little under 1%, large cap up about 2%, while small cap was up just over 1%. In a strong week last week for the S&P 500, actually developed markets ex-US outperformed. That was up just over 3%, and emerging markets up about as much as the S&P 500 at 1.9%. Bond market last week moved hardly any at all. The Bloomberg U.S. Aggregate Index was up 11 basis points, with the 2-year yield down 1%, or down 1 basis point, and the 10-year was flat on the week. So let's look at the calendar for economic activity for this week. We'll start off with tomorrow. We have durable goods orders ex transportation. We'll focus on durable goods orders. Month over month, for the month of December, that was expected to have been up almost 0.8%. Now the November reading was surprisingly weak at negative 1.1%. Wednesday, as we mentioned, the FOMC, Federal Open Market Committee, will be giving their rate decision. It's expected to be no change and to keep the target range between 4.25 and 4.5%. Thursday, GDP for the fourth quarter will be coming out. Now, the consensus is 2.8. I mentioned the Atlanta Federal Reserve expects 3.0, but the market expectation is 2.8. The third quarter of last year was very strong. That was positive 3.1%. Friday is another really big day in terms of economic data that will be coming out, and key focus on inflation. So PCE, core PCE will be coming out, as well as personal income, personal spending. Core PCE is actually expected to weaken or increase a little bit for the month of December. So the month of November, it was up 0.1% month over month. For December, that's expected to be up 0.2% month over month. Now the PCE, the headline number, is expected to come in at a positive 0.3 month over month. In November, that was only a positive 0.1. So if it does come in at that positive 0.3, that will mean that the 12-month look back on that index will be PCE, personal consumption expenditure index, up 2.6%. Last month, at the end of the month, it was 2.4%. So it would rise to 2.6%. And of course, the Federal Reserve targets 2.0 or lower. Personal income, personal spending, those metrics are expected to be strong for the month of December. Personal income is expected to have risen 0.4% month over month. November, that was positive 0.3%, and personal spending is expected to come in 0.5% month over month. Month of November, that was positive 0.4%. Well, that's it for the recap for this week. Again, thank you very much for your attendance. We'll look forward to seeing you again next week. Thank you.